What's going on, everyone? This is Stephen Place with Precision Volume Alerts, and today I'd like to step through a couple of the headlines that came through over this past weekend, how that narrative aligns to the price action in individual stocks, and then we're going to look at a key opportunity in a name that you may not have heard of that allows you to profit from some of the supply chain shortages that we're seeing. So we've heard so many things about the supply chain and inflation, whether or not it's transitory, whether or not it's structural. And a couple weeks ago, we had the chairman of the Federal Reserve come out and say, hey, maybe we need to retire the transitory word for a little bit. And that caused a serious price response in a lot of tech stocks as they sold off and more inflationary themed stocks as they started to rise. Now, my belief is that a lot of the supply chain shortage issues are not going to hit the same people evenly. All right, so it's going to matter a little bit more for the individual consumer. It's going to matter more for, mom and pop shops that don't necessarily have, like Walmart has buyer's agents where they go out and they compete on price and they try and source things. But it has gotten bad enough where one of the most powerful companies in the world actually had to stop producing their product because of semiconductor supply chain issues. All right, so let's step through some headlines, and then I'll show you one stock that you may want to consider in a sector that I think is poised for some serious upside. So let's hop over really quick. As an example of what some of the mega cap tech companies are doing, here's a headline from Amazon. Amazon's making its own shipping containers, and they've got their own planes. And if you don't know much about the shipping container world, one of the cool things that the world globally did a couple decades ago was standardize the length of shipping containers so that they were interchangeable on ships and trucks, and you could reuse them and repurpose them no matter what company is using them. And Amazon is no longer doing that. They're building their own shipping containers that are slightly larger, and they're getting their own planes. So they are basically building out a parallel supply chain infrastructure to reduce some of those risks. Okay, that's how much money that they're currently throwing at this problem. That's how much it matters. And the headline for Apple, and this is the most powerful company in the world, right? It has everything on lock with respect to how they build out their products. They know where the chips are coming from. They know the lead times, and they have the smartest people in the world working on this. And even them, they could not manage some of the risks involved. And here's the key point right here. For the first time in over a decade, iPhone and iPad assembly was halted for several days due to supply chain constraints. All right, that should not happen with Apple. If that's going on with the most powerful company in the world, something has broken in the market. Okay, and we've sort of known that this has been going on. Auto manufacturers can't manufacture cars because of chips, right? A lot of them are being taken over by cryptocurrency miners and things like that. And we also have a risk with respect to Taiwan and some global geopolitics stuff. Okay, so all of that's going on, along with the fact that we came out of a very gnarly period in the world over the past 18 months and 2 years now, almost. And we're just seeing pile-on effects with that. Okay, so when we think about this as individuals, we say, okay, that's awful. But when we think about this as traders and investors and financial speculators, we say, okay, someone's pain is someone else's profits. And that is a theme that we've been working with for the past few months, saying, okay, who is going to get squeezed and where can we benefit from that? What companies are going to benefit from this? And one area that I think is absolutely primed is the shipping container. Not the containers, but the ships on which the containers are put on. Now, for those of you that don't know the space, it's kind of a trash heap on a lot of individual names. For those of you that have been trading for a long time, you probably know about Dry Ships and DRYS. And Dry Ships was a shipping company that was a great trader to have a lot of squeezes, but they just kept diluting the stock and doing secondaries and pumps and other things like that. And it broke the stock. And we've seen that, there's just a history of that kind of thing happening in shipping stocks. And a lot of that is reflected in the underlying price. So, if we were to look at something like an EGLE, which I've traded in the past, it's had a nice run, but it has seriously come off of its highs from, $56 down to 40. All right. So there may be an opportunity there, but what I'm looking for is relative strength. I'm saying, okay, what companies are seeing the not necessarily companies, what stocks are seeing the best price action relative to the narrative given. Okay. And so the one I think you should absolutely keep a watch on right now is Zim Integrated. This is a name that has been a momentum darling in the past. It opened up, IPO'd back in January. Pretty sure it was an IPO, not a SPAC. At about $12. It's currently trading at $50. So it's seen a nice run. There were a lot of folks trying to buy this breakout back on Wednesday of last week. And there was an attempt to clear above 60. But sometimes when we have too many eyeballs on a stock and way too many people leaning into it, you see one more stop run to flush them out, get all the leverage out of the system, and then you can make an attempt from better prices. So the key thing I'd like you to look at in this chart has to do with the volume roadmap that we use inside of PVA. And it's a little bit harder to see because we've already put some lines on it, but there is a key low volume node right here, an LVN. When we see an LVN develop in an individual stock, that usually means that's where we see price response into it. Okay, so if we sell off hard into an LVN, oftentimes we'll find aggressive buyers. If we knife through it and then come back and retest it from the other side, that's where we find sellers. So what I'd like to do just really quick is just take some arrows and show you the kinds of price responses we've seen recently. So here was one back in, was that August of 2021. Here was price responses to the downside right here back in October. And then what we've seen recently is price responses once we got back through it that have held right here. And where'd my arrow go? Right here. Okay, so this is a key level. This is a critical level. Now, if the stock completely falls through it, then you don't have to trade it right there. You can look a little bit lower, and we've got another key level coming in at about $46. If we got there quickly, I would be buying calls into it. But what I'm doing right now is I'm just monitoring near-term price action to see if we can get some recovery from here. Because if this level holds, what tends to happen is you're going to see the next high volume node, HVN, as a magnet. And so that first level is going to be right around $54 a share. And then we tend to see with what we call a failed breakdown, a move to the other end of the range, and that's potentially $60 a share. So the stock's trading at 50, it could go to 60. That's a 10-point move, so that's about 20. Yeah, it's about 20%. You can leverage that further with long calls if you want, where you can earn double, triple, quadruple the total risk that you get in a trade. So we're not in it yet, but we very well could be if this price action really starts to firm up right here. If you want access to exactly when we put on this trade, what we're looking for, what call options to buy, and if you want more information on the volume roadmap, below this video is a free training where you can get instant access to the system that I use. I'll go through it. I'll show you how it works. I'll show you the power of using leverage with options. At the end of that training, you can then go and become a member of Precision Volume Alerts. That's where you get access to my entire portfolio, all the call and put options that we're doing, as well as the alert for if we get into this trade, which could very well be today or over the next few days. So sign up for that class, go get trained, go become a member of PVA, and I'll see you on the other side. Have a great day.